proper investment management is not really possible unless there is a proper financial plan. So I'm going to go through our financial planning engine from top to bottom and talk about the various major components of a solid financial plan. So what we have here is Frank and Joanne Miller. Frank and Joanne Miller it's a hypothetical client just for illustration purposes. They have a net worth of $1.8 million, and they have a little over $1 million in investments. So before we get into all of the details there, the good place to start whenever you're doing a plan is just building the facts. And you got to start off with your basics, like your family members, how old they are, when you plan on retirement, what kind of life expectancy you anticipate for both spouses if you're married, and that has to do with your health and your family history. Any children that you have, how old they are, their relationships, and any extended family, because all of those family members are going to be part of this plan almost always. So it's a good place to start and to look for, kind of key questions that may be needed to answer. Like, for example, if there's certain children at certain ages, do they need to have some kind of college planning or any other type of education planning, or any other goals that you may have with regard to your children or grandchildren. So once that's done, then the next thing normally that you want to do is you want to look at priorities. It's important to prioritize because when you're looking at your goals, you can list them out, and that in itself can be quite a feat. But without prioritizing, you can't really make tough financial decisions about how to prioritize what you're going to do with your money, as well as your time horizons. So that's usually the next step that we usually go through is say, okay, let's look at these goals, whether it's a retirement planning goal, or whether it's a saving for a major purpose or a college. Sometimes there's managing a budget that's involved. Almost always there's a minimization of taxes element. Taxes are such a huge thing in a plan. That's got to be part of the situation. And then there's investment management priorities that you may have, providing a legacy. Many times insurance coverage needs to be looked at because without adequate protection in insurance or cash reserves, any kind of risk management, foundational things that can blow up a plan if those are not taken care of. And, a lot of times more and more we're seeing people needing to care for parents. And a lot of people like to, look at charities and how can we help our favorite charities and causes, as well as get good tax breaks and the best way to manage that. So once that's done, it's usually a good idea to do these priorities for both spouses if you're married. That way there's a discussion about how to bring forth the plan. Then there's the goals, and the goals are, the big one is almost always retirement, whether you're retired now or planning on a retirement at some future date. Retirement is a horrible word, actually, because many people don't really think of their life as being, I'm retired, so to speak. It's more like that lifestyle, as I start shifting my lifestyle through time, what does that look like? And there's multiple phases. Sometimes there's kind of an early retirement where you're still working or you own a business and you're still more involved. And then there's kind of a mid-time, and some people really own businesses their entire life and pass them on to their family, and they're always involved with business. So there's always some element of retirement involved with that, or some work income. And so once we get the goals, you could add the goals in, and that's really going to help, education, travel, home improvements, weddings. Weddings are a big one. You see that a lot. Elderly care, anything like that. So now we've got priorities and now we have goals. And now it's good because you have a situation where you can start gathering your data. Normally then we move into kind of a net worth part. So those are all your assets, all your liabilities, any money that you own or you owe, and giving you your net worth at the end. And then you want to look at your income, and there's lots of different income sources. There's, of course, salary and bonuses, deferred income, annuities, immediate annuities, pension plans, real estate investments, other S-Corp businesses that you may own, passive and non-passive income, all of those income elements. And, of course, the Social Security element that is involved with your situation. And the Social Security can be analyzed to see when should you take it, when's it optimal to take it. So all of those things are really important to look at to do a proper plan. And then, of course, your expenses. What are my expenses now? And expenses are a little bit tricky, and a lot of times people get this wrong, but it's very important to split expenses based on what you have, that expenses that are kind of you have to pay, or non-discretionary expenses versus those expenses that you have some discretionary ability with. And then your liabilities, a lot of people put their liability payments in the expense line, and normally you don't want to do that. You want to put those separate, you want to account for those separately, because there's a way that you can analyze the situation to figure out what's the best way to deal with any kind of liabilities you have. So getting those living expenses right, liability payments, educational goals, and usually we will separate out the insurance premiums too, so that we can get a handle on what the costs of managing risk are for you. And then, of course, you've got all of your tax assumptions, whether you're filing a Form 1040, whether you have state taxes, like this particular client has California state taxes, any local taxes, because that tax part of it is a big deal. And when you're putting in the net worth information, like your assets, it's really important to have the cost basis and that information in too, because that will help with the decision-making process. And then we normally move down to savings and contributions. Basically, what amounts are you saving now versus what amounts that you may be saving in the future. So that's one of the things that we want to look at. And then we usually break them down by wherever you're putting them. And we also look at if your employer is also saving on your behalf, like they're matching your 401k, 403b, all of those types of things. Then we move into the asset allocation, and that has to do with the investment management. How are your assets being managed now versus in the future? So let me just put this in perspective. What we're doing is we're building a base facts. This is what you're doing right now, as if you had, you're not making any changes. You're not doing any planning necessarily. Right now, we're just saying, this is what I'm doing right now. And that's important, because then we have a base fact, and then we can do scenario analysis later on, which we're going to talk about. And that scenario analysis will help us see what the incremental increase or decrease in your situation looks like by making various decisions. So, and then we go down to the protection, all policies that you might have: life insurance, long-term care insurance, disability insurance. And then once that's done, the first step is, now we've got this data, then it's looking at observations and next steps. So it's basically doing a SWOT analysis. What are your strengths and weaknesses and obstacles that you may be having to overcome, and challenges, so that we can actually take a look at these strengths and weaknesses and make recommendations based on that. And then move forward into the planning stage. So now, once we've gone through all of that, then we go into the planning stage. So we've built a facts base, and then we'll generally go into a decision center type scenario, where we're saying, okay, here's my base facts right now. And based on my base facts, this is what my retirement looks like. This is how long my money will last. Given what I've said, this is how long I can expect. And then we also do what's called a Monte Carlo simulation, where we're saying, look, we know that the markets sometimes in the investment world, economic world, can be good, bad at various times. What does this plan look like under various scenarios? And we can run this Monte Carlo simulation and take a very strong look at that. And we can even go to the cash flow year by year, like this graph here shows cash flow each year and where it's coming from: Social Security, salaries, bonus, what are my guaranteed income sources, non-guaranteed income sources, required minimum distributions, all those things that are forecasted out. And that will give a good idea about what's happening. So now, once that's done, basically then we can look at scenarios, and we can run tons of scenarios. And then once we run these scenarios, we can actually look at it and we can flip switches and say, okay, what does this look like with various decisions? If I support my family, this is what it looks like. If I retire three years earlier, that's what it looks like. If I sell my vacation home, or if I don't sell my vacation home, if I reduce my property taxes, if Social Security is a lot less than what I thought, all of that. So this is really what's needed to do a proper plan. And also, it's important to keep all your documents together. So having a vault that's secure and having that information loaded in a way that makes a lot of sense and organized in a way where you can get to it, and only you can see certain areas, or you can share that with your advisor. That's kind of how we work. So the reason I bring this up is because when people talk about planning, I find that most of the time they're really not talking about this level of planning. This is what we would call advanced planning. So there's two types of planning that we do. One would be advanced planning like this, where we're looking at things in very close detail. For most people who are over $1 million in net worth or investable assets, this is appropriate. And then we also have a foundational planning program that we do that is more not detailed cash flow year by year, but it's more goal-based and putting in savings numbers based on goal-based financial planning processes. So this is a cash flow-based process 100%. The foundational type approach is more goal-based. And there, it's not good or bad doing one or the other. It really depends on your needs, whether or not you should use one method or another. So sometimes it's important to bring in other professionals like attorneys for, you'll find that maybe there's some estate planning things that need to be done, wills, trusts. And sometimes most of the time, bring in a CPA that we work with. We work with several CPAs internally. And then we use this portal as a way to do what ifs with the CPA. So, we can look at the various tax impacts and how does that affect your plan. So this is the way to get a good plan. And then your investment process is likely to be much, much better, and you won't be making a lot of unnecessary changes if you do it this way. So that's really all I have for you right now. A little bit in depth, but hopefully you got something out of it. If you have any questions, feel free to give us a call. We also offer free portfolio reviews. If you want a second opinion on your portfolio, just let us know. We'll have a 30-minute, we'll send you out a link and you can look up the calendar and have a 30-minute review and just see if there's anything that we can help you with in terms of getting yourself back on track or just getting a second opinion on what you're already doing if you're working with other people. Also, sign up for our blog. You can go to www.wealthnetinvest.com and you can sign up for our blog, and then we send you various information. And one last thing, my book, Financial Freedom Blueprint, you can get that on Amazon or you can get that from us directly. And just ask us and we'll be glad to give you a free copy that I will sign of my book. And it really goes over some of this process and how to prepare for this type of a situation. And there's a lot of common questions in there too, like, should I pay off my mortgage and things like that. So keep in contact with us. As always, we're here for you. Louis Llanes, Wealth Net Investments, signing off for now.